Well, in August last year, the overall market did poorly, and IPOs in particular, because there were many extended valuations and a pretty active level of issuance.
I mean, they came out with prices that were too high.
Exactly. And what happened is when the overall market corrected, these companies corrected even more, and it put a chill on issuance and made the IPO investors very careful about what companies they were going to invest in. And most importantly, then there was a shutdown of about 4 months where no activity happened whatsoever.
Where everybody said, wait, I'm just going to see what happens to the market before I dip my toe back in?
Exactly. And these kinds of shutdowns, they don't happen too much. We had a pretty extended, 4 months is a pretty extended shutdown of no deals. So when the window opened, and our studies show that when it opens slowly, but very strong companies and attractively valued companies come out after these market shutdowns. We call them icebreakers. We've been in this period of a very good period for IPO investors and positive returns, because only the better companies with strong returns are getting done.
So that's the silver lining. What you've been watching in technology in particular is that issues are coming to market. They're at better prices than they'd been looking for before, and as a result, investors are winning as well.
Actually, in our mind, it's all about investors. If investors don't win, companies don't get to tap the IPO market. So
but can we go back to the perennial debate around pricing, which is to say, you said these are good prices. They're good prices because the investor is winning. Are the companies then underpricing themselves?
Well, I think that in an environment like this, they have to offer something attractive enough, because investors are really selective. And we just saw Nutanix, a very exciting tech IPO that just soared, and it raised the range twice, priced above the range, and soared in its initial offering. When it first set its price, it was well below its peers. Truly, there was a lot of money they left on the table, but in order to get the investor attracted to the company and have it really reach a sustainable level of trading, we've had to see very strong valuation cuts.
So should we expect to see some of these unicorns that we've talked about for so long getting ready to come to market too? Because that was kind of the expectation was, okay, these valuations are out there, but if these guys ever come to market, they're not going to be able to get that kind of valuation. Is that still the case, or do you think that that perception has changed?
Well, the companies that we've seen so far, you could say Nutanix was a unicorn. They are pricing, in Nutanix's case, it was slightly below its last round, private round, which was done in 2014.
Okay.
So I think that we're working out, there's been a disconnect between the capital in the private market, there's a lot of capital in the private market, and the excessive valuations that have been there, and then getting those companies, they've been locked into the private market, getting them out into the public market where there's a lot more valuation sensitivity.
Very, very quickly, will we see Uber come to market next year?
We think that the Ubers and Airbnbs, the very large unicorns, will probably make 2017 their time. I think that if these companies can do a better job at making money, as they have been at raising money, then we think that they'll fill into these high valuations, and maybe investors will look at 2018 and value the companies with maybe lower multiples than they've had, but perhaps those companies, there's a lot of anticipation to see them. I'd like to see a prospectus. We don't know too much. We hear a lot, but we can't open the book and see things. We'd like to see it and understand the businesses.
Kathleen, thank you very much for joining us.
Hey CNBC fans, thanks for checking out our YouTube channel. Here you're going to find videos packed with all of the information that you need to be smarter about your finances. You can subscribe by clicking right here, and click on all the videos around me or the eye right here to watch the latest from CNBC. Thanks for watching.